You spoke to Dr. Reddy's management. What did you start by asking?
So Anand, there was a lot of confusion when the numbers came out. People thought there are one-offs and some non-cash items which have been booked into the company. I started by asking the management that what essentially led to these sort of numbers. What were the key problems because of which the profitability went down so much? Let's listen.
We stopped complete dispatches to Venezuela. The ruble, crisis has fully sort of played out. It's in a thing, and in terms of also the remediation costs. I mean, in totality we spent about 40 million US dollars, of which 1/3 of that was spent this quarter as well. So those were the main things which led to these numbers, and hopefully from here on we'll start building as we keep launching in North America and some other markets.
Right. The CIS and the Venezuela region, of course, saw a decline of 26%. It's a very small market for you. Can you just tell us that are we committed towards, going into these countries? Because there has been a lot of currency issue. There has been a lot of dollar availability issue. Are we committed towards investment into these areas?
Already launched one, and then two more to come probably this quarter, and subsequent quarters we'll see more launches. We have got the biosimilar approval in Russia, and the big tender starts in November, and we intend to play a role there. All the CIS markets, we are fully and deeply committed. No question of rethinking on those things, and so that journey continues. As far as Venezuela is concerned, it was a very big geography for us. $100 million plus. In earlier years, actually probably a little more than that. But post the crisis, we provided, some of the sales, about 60 million in the last quarter, and thereafter we are not dispatching anything with the condition that unless we get money through an international bank, we will not be dispatching anything more to Venezuela. Orders are on hand, approvals are on hand, but we won't be able to sort of predict. This will play out as the political situation in the country unfolds and economy stabilizes, hopefully, with oil at some point in time. But till that time, we will be staying put.
Right. So apart from this, the other issue was the remedial costs that you have booked. Can you just tell us what is the remedial cost that you have booked on the 3 plants that are facing FDA issues, and is majority of the cost behind us?
In which remediation activities are over, right? I mean, we have completed whatever we committed. We have done most of the things except for a few ongoing long-term commitments, which is part of institutionalization of the quality activities. But having said that, we are in the process of requesting the agency to come back and re-inspect the plant. So we are more or less done. And also on the expenses, I said, with this quarter, it will more or less taper off.
Right. A lot of companies have received EIRs for their closure. So, are you looking at an EIR once, we see any sort of inspection happening at these plants?
Yeah, I mean, I think whatever unfolded in this country with various companies in the last, let's say, 4 to 6 quarters, I think a lot has happened, not just our company. I think all companies have put in immense amount of effort in sort of improving the standards. And I think as a country, not just as a company, we feel fairly confident that we will be able to rise up to the expectation of the agency, fair expectations, because a lot of exports go from India. And I think, the journey would certainly continue from this part of the world.
Right. The other issue that impacted the top line and the bottom line was the pricing pressure that we are seeing in the US market. Can you just talk about that? Is that a big issue that we should look at?
Yeah, that is for sure, because the buyers have consolidated a lot. So that's putting one type of pressure. One would have heard of a lot of price upward adjustment, etc. in generics, which has virtually come to a grinding halt. And of course, more people are coming in, more approvals coming in from various companies. And so overall, yes, there is more competition. But yes, at the same time, the good news is I think there is a lot of Indian companies getting more and more market share.
Right. So the problem, at least for you, is that a lot of approvals are giving and you were in the niche market. So most of the approvals have come in there. That's the problem.
In general, I think there are a lot of commodities also saw approval. I mean, this is not just niche molecules or something else. A lot of other companies have got a fair amount of approvals. Quite a few of them may or may not be value accretive. Some are. In our case, we have just launched one, which is fairly good molecule in terms of value accretion.
Right. The best way to try and adjust largely to these changes would be to invest a lot in R&D, go ahead and get more niche approvals. Is that something that we are looking at, to up the R&D spend than what we used to do generally at Dr. Reddy's?
That is for sure. I mean, there is no other way. I think continuing to invest in R&D is name of the game. I think most other the top tier Indian companies are all investing in R&D, and that's name of the game. I think that would continue for sure. How well we use that money to reaching the level of approval is to be seen. It will differ from company to company, but we are fully committed on that journey of R&D into development of products.
Right. So pricing pressure in the US is there. Of course, that is impacting the top line. But, costs don't change. So at least, till we see a meaningful pickup in the generic markets, do you believe that a pickup in margins is unlikely?
If the quality of approvals do not measure up, in terms of their, value proposition, this certainly the erosion will catch up faster. So that is, I mean, for sure. I mean, compared to 3 years back to now and in the future, I think companies which are getting quality approvals early would reap benefit. But the plain vanilla game is getting over.
Right. As far as margins are concerned, of course, they may be on the downside because of what we are seeing in the pricing pressure. But volume catch up, growth via volume, is that something that Dr. Reddy would change the strategy to?
No, it's still a very attractive market. It will continue to be an attractive market, but to just bank on one market is certainly not a great strategy. So we have always been investing into emerging markets, India, and we are opening up few other emerging markets as we speak. Europe will see some interesting launches this year, and feel good about it, but can't talk about it till we see finally launch into the market. But overall, I think our efforts are on in sort of branching out. But having said that, will it sort of sharply bring down the percentage of North America's contribution to our overall kitty? Unlikely very soon.
Right. As US is seeing some sort of pricing pressure, Europe, of course, you have a decent presence, at least when you compare to some of the other large cap listed players. What would be your strategy over there? European revenues also, I saw, declined by about 14-15% in this particular year. What's the market over there? Will we try to make up for the growth in the US in that particular market?
Overall, in terms of the generic market, it's certainly much smaller than the US market. I'm combined Europe, I'm saying. There are many factors at play there. The pricing expectation by the pricing authorities there are much more stricter. Commoditization happens much faster. So given all these factors, I think it's not going to measure up to the US this thing, but the story is the same. The story is the same. If you get good products, it can be value accretive even in US.
Right. So the India market, of course, grew. It grew by about 10%, but it was lower than estimates. And for quarters now we've seen Indian markets growth disappointing, not only for you, but for the industry. Do you believe the slowdown here in Indian market or the growth slowdown that we've seen, may just, be much slower than what earlier estimates were and targets were for 2020?
Indian market is growing much slower than the earlier quarters. You probably have heard about the NLEM issues. The repeated indications which are coming out from the government. There's a lot of confusion in the market. All this is leading to the trade being hesitant in stocking and taking products. So given all these factors, today I think the IMS data for the market is substantially lower than what it used to be. And actually, on an MQT basis, or the quarter basis, we are about 3% higher than the market at 10%.
Right. A lot of MNCs are, because of this pricing pressure, this pricing cap that we are seeing, may not actually come and launch a lot of essential drugs here in India, at least in the new ones. Does that become an opportunity for Dr. Reddy's?
Yeah, it is. I mean, companies will be, will be fully committed. There's no doubt about it. But you're right. I mean, one of the things we are contesting, a blood pressure drug at 2 rupees 30 paisa. It's difficult to sort of, power it with, good R&D and investment and all that. But, we have a philosophy. So we will not compromise on quality. So we'll have to pick assets and, try and be relevant as well as commercially viable, So that is true for, I think, all companies. And but overall, I think you're right. This is going to certainly have introspection, for many companies that, without thoughtless launches are not going to return money in this market anymore.
Right. As far as Indian markets are concerned, it was expected to be one of the biggest markets for generics by 2020 or maybe 1 or 2 years later than that. Do you think that will change because of this pricing policy that you just spoke about?
Look, I mean, it's a different dynamic in play here. There is a lot of penetration potential because it's, we are still not covering, we are still covering part of the country, not just because of the cost of medicine, but because of the access, because of the, the people having access to healthcare, which is the major issue. So to that extent, penetration potential is very, very high, but the pricing is always going to be challenging. I mean, this is not going to, I'm not sure that this will reverse and, suddenly all the leash will be off the leash in terms of the pricing. So, we'll have to adjust to this new phenomena of growing volumes, low margins, and overall it'll still be an interesting market, I would guess.
Right. As far as PSAI revenues are concerned, they have been declining for a while. Do we see an uptick, or at least we can say is the worst behind for the PSAI segment?
Yeah, from here on, I think we will slowly be, because what happened was we got the, warning letter in the month of November, and then post that, the remediation activity was in full swing, and it had its own impact on especially in the API plants, manufacturing, and sort of batch by batch sort of repeated checks. So gradually, we have established in the new system, we feel much more comfortable. We have got full assurance that all distributed products do not need any intervention, and which has been certified by the external agency from US. So based on that, I think we will now be slowly getting back to the normal level of growth. And there is some change of strategy, but I can talk to you about that in the subsequent quarters after it plays out.
Right, sir. Thank you so much for taking out time for us and explaining about the numbers.